What's up, tech enthusiasts, and welcome back to Qualcomm Pulse. The pace of innovation never stops, and today we've got some absolutely massive news that's shaking up the industry. We're kicking things off with a story that's sending shockwaves through the semiconductor world. Get ready, because Broadcom is making huge moves in the AI space, and it could be a direct challenge to an industry titan. You're going to want to hear the details on this one. Next up, we're diving even deeper into the high-stakes world of artificial intelligence. We've got exclusive insights into a partnership that's poised to redefine AI acceleration. This isn't just about chips, it's about the future of how AI is developed and deployed. We're talking about a collaboration that could reshape the competitive landscape and unlock new levels of performance. Stay tuned. Now, let's shift gears to a different kind of drama unfolding in the tech world. We're heading into the courtroom for a story that highlights the intense challenges of enterprise software. A major retail giant is taking on a tech giant over contractual disputes, and the stakes couldn't be higher. This is a deep dive into what happens when partnerships go sour and what it means for businesses relying on critical technology. You won't believe the details. And finally, we're circling back to the financial markets to see how all this tech turmoil is playing out. We've got the latest on Broadcom's performance, with Wall Street analysts racing to update their targets in light of recent developments. Is this a sign of continued AI dominance or a sign of shifting market dynamics? We've got the breakdown and what it means for investors. Don't go anywhere. Make sure you're subscribed and hit that notification bell so you never miss a beat. Broadcom's AI Gambit, a $10 billion bet against the giant. Get ready, because Broadcom shares just exploded, soaring by as much as 16%, the biggest jump since April. What's the catalyst? A groundbreaking partnership with OpenAI to design and produce a next-generation AI accelerator, set to roll out starting in 2026. This move is a direct challenge to Nvidia's iron grip on the lucrative AI chip market. CEO Hock Tan confirmed securing over $10 billion in orders from a new, major client for Broadcom's custom accelerator business, a deal widely reported to be with OpenAI. This collaboration aims to equip OpenAI with custom silicon for its internal AI operations, potentially reducing reliance on existing dominant players and signaling a significant shift in the AI hardware landscape. The implications are massive, as these accelerators are the backbone of developing and running advanced AI models for tech giants. The market is clearly reacting, with Nvidia's stock seeing a dip on the news. Analysts are already revising their expectations, anticipating a significant boost to Broadcom's AI revenue outlook for fiscal 2026, with some projecting accelerated growth beyond previous estimates. This isn't just about a single chip. It's about Broadcom strategically positioning itself as a key player in the AI infrastructure race, leveraging its custom design and networking capabilities. But can Broadcom truly disrupt the AI hardware hierarchy? Stick around as we dissect this monumental deal and what it means for the future of AI development. OpenAI's AI accelerator ambitions, partnering with Broadcom to challenge Nvidia. OpenAI is making a bold move to diversify its AI hardware supply chain, looking to lessen its dependence on Nvidia's high-performance chips. In a significant development, the AI research leader is reportedly collaborating with Broadcom to develop and manufacture its own custom AI accelerators. Insiders suggest the first of these custom chips could hit the market as early as 2026, with initial order volumes reportedly in the billions of US dollars. This strategic partnership could fundamentally alter the competitive landscape of the AI accelerator market, a space currently dominated by Nvidia, whose GPUs are the de facto standard for major AI data centers operated by companies like Meta and Microsoft. Broadcom CEO Hock Tan has alluded to securing a major new client for his company's custom accelerator division, with a contract valued at over $10 billion, strongly suggesting OpenAI is the unnamed partner. Analysts are optimistic, with some forecasting accelerated growth for Broadcom starting in 2026 due to this collaboration, and further impetus in 2027. The AI boom is already a significant revenue driver for Broadcom, with AI semiconductor revenue in Q3 2025 reaching $5.2 billion, and projected to hit $6.2 billion by year-end. This move by OpenAI signals a growing trend of major AI players seeking greater control over their hardware destiny, aiming for optimized performance and potentially reduced costs, while simultaneously opening a massive new growth avenue for Broadcom. Will this joint venture truly unseat the reigning king of AI chips? We'll explore the potential impact on Nvidia and the broader semiconductor industry next. Tesco versus Broadcom, a $100 million legal battle over VMware support. Prepare for a high-stakes courtroom drama as Tesco, the UK's largest supermarket chain, launches a massive legal offensive against Broadcom and VMware, seeking damages potentially exceeding £100 million. At the heart of the dispute are allegations that Broadcom, following its acquisition of VMware, is refusing to honor existing perpetual software licenses and support contracts that Tesco had secured until 2030. Tesco claims Broadcom is demanding they switch to new, more expensive licenses, and that the refusal to provide essential support, patches, and upgrades puts their entire operation at risk. This situation is described by legal observers as potentially amounting to extortion, as running a business-critical enterprise on unsupported software is a highly precarious position. The UK supermarket giant argues that Broadcom's actions constitute a breach of contract, and they are seeking substantial compensation for the potential disruption and financial impact. This isn't an isolated incident, as other major companies like Siemens and AT&T are reportedly exploring similar legal avenues, hinting at a potential class action lawsuit. The core issue appears to be Broadcom's aggressive shift away from perpetual licensing towards subscription models, creating significant friction with long-term enterprise clients who relied on their previous agreements. The trust and reliability of software vendors are paramount in the enterprise space, and these legal battles raise serious questions about Broadcom's approach to customer relationships and contractual obligations. Can Broadcom weather this legal storm and maintain client trust? We'll break down the financial fallout and market reactions in our next segment. Broadcom's AI surge, Wall Street lifts targets amidst partnership buzz. Broadcom is proving that AI hype can indeed translate into substantial financial gains, with its latest earnings report showcasing impressive year-on-year growth. The company reported Q3 revenue of $15.95 billion, a 22% increase, alongside strong non-GAAP EPS and a robust adjusted EBITDA margin of 67%. The real engine behind this performance is its AI semiconductor division, which saw a remarkable 63% surge, reaching $5.2 billion in the quarter and projected to hit $6.2 billion in Q4. Adding fuel to the fire, Broadcom announced a new customer, has placed over $10 billion in AI infrastructure orders, a move widely interpreted as a partnership with OpenAI for AI accelerator design and manufacturing. This news has sent Wall Street analysts into a frenzy, with multiple firms, including Bernstein, Jefferies, and Morgan Stanley, raising their price targets for Broadcom's stock. They cite the accelerated AI growth trajectory and the potential competitive edge from custom accelerators and networking solutions as key drivers. While acknowledging some sequential softness in non-AI segments and potential execution risks for the large new orders, the overall sentiment is overwhelmingly positive. The integration of VMware is also contributing, with infrastructure software revenue seeing a healthy year-on-year increase. Broadcom's strategy, focused on custom silicon and networking, appears to be paying off, positioning it strongly in the AI infrastructure race and leading to a significant upward revision of market expectations. What does this mean for the future of AI hardware and Broadcom's market position? Stay tuned for our rapid-fire recap and full call to action. And that's a wrap on today's pulse-bounding tech news. We saw Broadcom surge on its massive OpenAI AI chip deal, pushing the boundaries of AI hardware. Then, we dove into the high-stakes legal battle between Tesco and Broadcom over VMware support contracts. Finally, we analyzed how Broadcom's AI-driven success is reshaping Wall Street's outlook. Don't miss out on any future updates. Like this video, subscribe to Qualcomm Pulse for your daily dose of tech, Hit that notification bell so you're always in the loop, leave a comment with your thoughts on these stories, and follow us on all our social channels for more exclusive content. See you next time.